Base metals producer Metorex has reported a 5.5% rise in full-year headline earnings per share as copper production jumped 60%. Gross revenue almost tripled to 2.78 billion rand. To take a closer look at these numbers, we're joined now by the CEO of Metorex, Terence Goodlace. Terence, thank you so much for your time. 60% jump in copper production. We saw cobalt production trebling as well. And last year, this time, you were talking about things looking relatively bleak. And you also mentioned in your commentary, you've moved, the company has moved from a position of survival to that of sustainable growth. So things looking far better.
Definitely a lot better. It was pretty stormy over the last 12 months. And we're starting to see a lot more blue sky, and we're pretty pleased with the results.
Okay, well, looking at the hedge book, because that's been quite interesting. You restructured it in December 2009, and also we saw a 400 million rand loss with regards to Ruwashi. You've also still got some hedges in place. Tell us about that.
Yes, we implemented hedges which were largely driven by a need to secure our operations and secure the repayment of debt. And we were opportunistic at the time, but we've replaced the project finance hedges, which were at $3,900 per tonne, with hedges that are substantially higher right now, and that protects our operations into the future and the debt repayment facilities that are required should there be a wild card and something similar to what happened in 2008 come about.
Do you think there is going to be a wild card? I mean, we were looking at some people talking about a double dip scenario, but China looking relatively good. We've got urbanization on the go there. Demand for copper looking relatively robust. Your view on that? I mean, the fact that you still have a hedge in place, perhaps you're concerned about future prospects.
No, I think the fundamentals for copper are very good. And that's driven off supply being stressed and the demand coming out of the BRIC countries. But at the same time, one can never say never, and we didn't want to put our shareholders at risk.
You're sitting with cash of 521 million rand. Your debt is down around 50%. Future prospects, because we know you are working on various projects as well.
Yes, we've got 3 projects in the pipeline, and we're advancing the feasibilities on all of those. I think key for us is the financial strategy into the future. We'd look to be using some of the cash that we currently have, but also using the cash which emanates from the operations into the future.
We're looking at Kinsenda project, Lubembe project, and the Musonoi project. Those are the 3 feasibility projects that you currently have underway. Where are these projects based?
They're all in the DRC.
All in the DRC. Well, just looking at the regulatory environment there, we know that in Zambia, interesting things have occurred from a tax perspective, and of course the windfall taxes that have been done away with, and a new regulation has been put in place. What are you looking at the DRC?
As far as the DRC is concerned, from a tax perspective, we don't believe anything should change. We've negotiated the numbers as they currently are, and they were part of the contract review renegotiations, which were completed late in 2008, early 2009.
We're just taking a look at the cash cost, $2,831 for Ruwashi, $2,782 a tonne rather at Chibuluma. So things also looking far better there. What attributed to cash costs coming down?
A lot of it is driven off the volumes and the values that we've been mining. They're key in all of this. I think the other aspect which drives the costs down at Ruwashi has been the very high cobalt price, and the fact that we are outperforming in terms of cobalt production, which is a credit against those costs.
Looking at the overall global economy, we saw copper inventories coming down significantly in China over the past week, so things looking far better there. Tell us about your prospects for the cash costs. Do you think that you can maintain these levels, and also looking at future profit margins? I mean, you're talking about your hedge book assisting you down the line, and you're also talking about sustainable growth.
Yeah, as far as the costs are concerned, there will be cost pressures. We can't ignore that. But at the same time, with us getting into full production at the Ruwashi mine, that should assist us. With us outperforming in terms of cobalt production, that will also assist us. As far as the mine in Zambia is concerned, we are moving into areas of higher grade, and that should mitigate some of the cost pressures.
State royalty charges amounting to 115 million rand. In 2009, it amounts to around 20 million rand. Do you see that coming down?
No, it's because those are based on a percentage of revenue. So as you produce more revenue, those numbers will go up.
Do you think that it's fair that you're paying those royalties though?
Well, in essence, we agreed with the renegotiations, and it's part of doing business. It's something that happens all around the world. It's being implemented in this country. And no, we feel that's the right way to go.
What do you make of what's happening in the mining industry here in South Africa? We're talking about nationalisation of mines. There's various things and shake-ups that are happening. And of course, this also accounts for what's happening on the rest of the African continent. Do you think it's a step in the right direction? And what do you think it's going to do for future investments in the mining industry?
I think there is a bit of pressure. There is a bit of the sentiment has changed slightly towards South Africa. Which is a concern. We also look at what's happened in the DRC with some of our competitors, which is also a concern for us. But we need to make sure that we build and operate mines that do deliver value to all the stakeholders, and ultimately you should get to a position where some of this talking should stop.
All right, the copper price, a peg on that, we're sitting at around $7,693 a ton. You're talking about your hedge being around $3,900 a ton. Future prospects for that, and also just if you could add in what the biggest challenge and the biggest risk is for copper demand out there.
I think just a correction, our new hedges are substantially higher than the $3,900 per ton. That those expired at the end of June. So our current ones are between 7,000 and 8,000. So we're in the ballpark as far as that's concerned. Yeah. If when one looks at the future, we're hoping that it'll stay at these levels, and it is going to be driven by what happens in demand and ultimately what happens with the BRIC countries. Having recently been to China and seen what happens there, one gets a warm feeling around that the demand of higher bases will continue.